Welcome to our weekly Forex forecast. My name is Jay Norris. As always, we need to remind you that trading Forex is a risky endeavor and not suitable for all investors. As I said, my name is Jay Norris. I've written a couple of books on Forex trading which were published by McGraw-Hill and which serve as the textbooks for our courses. And I'm also the Director of Education at Trading University. First market we're covering is the Australian dollar. This is a daily chart. You can see you still have that primary up, still have that secondary pattern up. That's very important to us. Markets had a tough time trying to press lower, I think, because of those higher time frame charts are up like that. On the other hand, that day-to-day pattern, pretty important pattern, pretty stalwart as far as providing resistance in the market. You can see it's really put the lid on things, and it's right on top of, it was right on top of that that monthly pivot last week also. So you had confluence of resistance between the monthly pivot and that bottom of that day-to-day zone, that day-to-day resistance. So as long as that day-to-day pattern's lower, as long as you're below that zone created by that purple line and that orange line, it's going to be tough to get any traction on the upside. So you're kind of in limbo here. Market's balanced up. We could say it's balanced between that day-to-day pattern and that secondary pattern. That day-to-day pattern, by the way, is a very influential pattern. I'd even go so far as to say if you're an intraday trader, swing trader, that day-to-day pattern is probably your most influential pattern. The day-to-day has really become what the primary used to be many years ago, as everyone seems to be focusing on the short term more and more. In fact, a full 95% of financial futures volume is now day traders. Something to keep in mind. Short-term traders really do rule the roost for the most part intraday. Here's the euro US dollar, and here's another one where that day-to-day pattern is up, and it's been up. It's stubborn. Look, you had a double bottom on the top of that day-to-day zone, so very tough. And now it found support actually on this trend line here. It's also been above that monthly pivot, that monthly central pivot. So again, a confluence of support between the that day-to-day, the top of the day-to-day zone and the monthly pivot, and now it's holding the trend line. So structure pretty friendly for the euro still. On the other hand, you're up against long-term resistance. You see that primary pattern down, that primary resistance line down. That's primary pattern structure you're looking at right there. I think that's a 382 retracement of the entire down move. So pretty good resistance here. Again, it's another market that's balanced up. You're balanced with that day-to-day up and that primary keeping a lid on it, kind of the opposite of what we were just looking at, the Aussie. But that's the way it is. You know, we're not going to get any definition until this market makes a move one way or another. And as I said, that day-to-day pattern, very influential. As long as that's up, it's tough to try to press this market. Perhaps you could try to sell rallies as a counter trend move, but overall I would still favor buying dips given that day-to-day is still up. Long term, however, if you're a longer term trader, you have sell signals all along here. Every single one of those sell signals, you'd be in the money right now, and you'd have to have your stop up above that September high though. So I imagine you'll have some stop orders piled up above that September high. So long term, if you're a position trader, you're looking to go short here because you have sell signals in place. If you're an intraday trader, swing trader, you're still looking to buy dips. So that explains why the market's balanced up as it is. Pound dollar. Here's an interesting one because you have the short-term primaries down, but your primary itself is up. So again, it's a balanced market. You're balanced between primary resistance up above and that day-to-day pattern right there, that all-powerful day-to-day pattern right there. So another one, not a lot of direction. Again, if you favor that, if you emphasize that day-to-day pattern, such as we do, you'd really be in buy the dip mode. So here's another one where it can go really either way. I wish we had more definition for you on these markets. Another market that's balanced up pretty well. And dollar CAD looks like you have a little bit of room on the upside. Dollar CAD's one we'd be interested in buying a dip in line with that day-to-day pattern. You're going to have the other intraday pattern, your 60-minute, your 15-minute pattern. Those are going to be up too. So dollar CAD, that would be somewhat of a tough one, unless you had some really bullish Canadian dollar news. That would be a tough one to derail this guy right now. I think you have a little bit of room on the upside. Looks like you had a little resistance at par there at 100. But to me, this is a market that you continue to buy dips in overall. Boy, it's a different marketplace, isn't it, than when it used to be the dollar against everything else, and that's just not the case. We're seeing dollar pairs where you have an uptrend here. The dollar CAD has an uptrend. At the same time, so does the euro, so does the pound. So it's not necessarily just the dollar against everything else. You're kind of seeing the different markets are doing their own thing, and I think that makes for a healthier market rather than just everything blindly going up against the dollar or down against the dollar. Looks like the markets are showing their own characteristics based on their own economic differences, economies, etc. Dollar Chief. Dollar Chief, I would continue to favor the downside because the secondary pattern's down, that day-to-day pattern's down. That's that. Dollar Chief kind of a mirror image of Euro US dollar, and that's why I said in the Euro US dollar, yeah, you're up against pretty good longer-term resistance on that primary pattern. Same thing here. You have primary support just below, but as long as that secondary's down, that day-to-day down, we're still favoring selling rallies. We're still favoring sell signals in this market. In the Dollar Chief. Similar story in the euro, where even though those long-term patterns are down in the euro, as a short-term trader, you still have to favor buying dips until something gives on that day-to-day. Next market we'll take a look at would be the dollar yen. Dollar yen, day-to-day pattern up, and again, I favor that day-to-day over even the secondary and the primary, at least on the shorter term. So to me, I think you still favor buying dips in here, fading that secondary move. You can see how fading those secondary moves paid off here, and it's definitely paid off here. So as long as you have that day-to-day, I wouldn't be too shy about trying to fade that secondary. Next market, the U.S. stock market. Here's one where you actually had the day-to-day down, but you didn't get a whole lot of traction from it. It shifted down early in the week, I believe Monday or Tuesday, the day-to-day pattern shifted down in the U.S. stocks, but you still have that long-term trend line there. It was the primary, secondaries up. So, even a short-term intraday shift would put the majority of patterns back higher here. You can see you have that little green line. That's a 382 retracement of this entire move. So it's tough to get bearish on this guy, even though the day-to-day is down. We'll have to see how it plays out from an intraday perspective. Great trading vehicle, the S&Ps, but it's another one where you don't have a lot of definition. Day-to-day is down, but those long-term patterns are up. I'll tell you an easier way to view all of this, and it's how we're viewing it too. Much easier, much more black and white. You take a market, and if you see the majority of patterns are up, for example, how they are on the Aussie, then you're just going to continue to look to buy dips. Here's another one where in the euro, currently, you take these 5 in the middle here, and you have the majority are down. So if you're a day trader, you're currently looking to sell rallies in there. A lot easier way to look at it than look at the charts and try to determine all that. So that's essentially how we're teaching it. We're seeing great results with it as far as trying to qualify it with that. If you want to know more about what we're doing at Trading University, we certainly encourage you to come and see us. And here's our website right there. And there's my email address. If you want to come and see what you're doing, you click on it. Basically, click on education. If you want to see what we're doing in live markets, this is where we highlight trade setups and signals in live markets. Come here and join us. Click on register now, and you plug in your own username and email, and that'll get you signed up, and you can come and see what we're doing. Or if it's just easier for you, go ahead and email me at trading-u.com and say, hey, I want to sign up for a trial for your live market analysis. You come and see what we're doing in the live analysis. Come and see what we're doing in the live market analysis, and we'll get you on the list there, and you can come in and see what we're doing, and we can send this out to you. You can demo this and see how effective this is. Our pattern ratio, where essentially we just break the market down, and the pattern's very black and white. You're either looking to buy or you're looking to sell. As we always say, there's only one side of the market. That's the right side of the market. We don't care whether we're buying or selling. The idea here is just chip a little money out to make some money. So, yeah, we look forward to you coming and seeing what we're doing. Do our live market analysis tomorrow. So we'll see you then. Thank you so much, and everyone have a great Sunday, great weekend.